G'day everyone, welcome to FinChats. My name is Hoy. Now, on Monday, 29th of January 2024, the Evergrande Group was ordered by a Hong Kong court to liquidate after the company was not able to restructure its 300 US billion dollars that it owed to investors. Now, this is an explainer video, so it's a little bit longer than usual. But in this video, what I plan to do is walk you through what Evergrande is, the background that fueled Evergrande's growth. And once we have that background, I'll tie it back to the court ruling that I just mentioned. And finally, let's talk about the implications of all this. Why should we care? Especially if we're nowhere near China or the property development market. First things first, what is Evergrande? Now, Evergrande is a property developer in mainland China founded in 1997. It went from nothing to having $150 billion US dollars on its balance sheet within 10 years. And at one point, it had over 1,000 projects in over 200 cities. It went so gangbusters. It was the fastest growing company in China, growing at 44% per annum between 2004 to 2020. So that's unimaginable growth. It eventually became the most indebted property developer in the world, and that's where all its issues come from. But we'll get to that. For the time being, let's get to the background. So how did Evergrande get to the point where it was growing at 44% per annum for such a stretch in history? So we've got to understand a little bit about China's history. Now, in the 1990s, about two-thirds of the population in China lived in rural areas, right? That equates to about 760 million people. Now, towards the end of that decade, towards the early 2000s, the urban population grew from around about 415 million to more than double that, to about 900 million, or more than 900 million. So it begs the question, why? And the reason is that hundreds and millions of Chinese farmers were migrating from rural to urban cities in the hope of getting better jobs, in working in big factories that would pay better wages than the very, very low wages that they were earning as farmers. So here we have a migration fueled by better opportunity, and that created the necessity, I should say, of building houses. The middle class increased to more than 400 million people, and those people had to have somewhere to live, right? And that's where Evergrande and actually other property developers stepped in. So, what the process that they used to do was that Evergrande and other property developers would buy land from the local governments, and they would sell it to people like you and me who would want to buy apartments. The thing was that they would sell these apartments, what we call off the plan. They haven't built it yet, but they just said, look, these are plans. If you give us money, if you buy it now, we'll secure you this apartment. So these home buyers would have to make advance payments to secure their apartments. Now, it would take several years for Evergrande to build the apartments, so then home buyers can move in and settle into their apartments, right? Now, in the meantime, what Evergrande would do is take this money and then fund other projects, but which then stores the original project that the original home buyer has invested in, right? So the natural question then is, well, why did they do that? The simple reason is because there were competition to build more houses, or apartments, I should say. Because if Evergrande didn't build the next project or the next apartment, then other property developers will. So it was always a race to build the next property. And it was always a case of, where do I get the money to start or continue the next project? Now, that went on and it went well for a while. But remember, what fueled this growth was the migration of workers from rural to urban areas, right? But like everything good, the migration had to slow sooner or later, and that's exactly what happened. Now, just to give you a stat, because I'm a fan of stats, the China's urban population growth was around about 3 to 4% back in the mid 90s, and then it basically continued through. But in 2020, it dropped to around about 2%, which basically signaled that the migration of workers from urban to rural from rural to urban areas was slowing down. Now, and you could see the physical consequence of this slowdown, right? So the ratio of empty apartments in China range between 10 to 50%, and if you're a small city, it could go up to 50% empty apartments. Now, if that didn't sort of blow your mind, here's another statistic that probably would. It blew my mind when I came across it. There are enough empty houses in China to house about 90 million people, 90. Now, put it into perspective, that's more than the population of Turkey. That has Turkey has a population around about 86 million. That entire population. Germany has a population of 83 million. The UK, 67 million. Thailand, 72 million. From where I'm from, Australia, we've got a population of somewhere around 72, uh, uh, 27 million. China has more apartments, 3 times more apartments, empty apartments, to house Australian population, 3 times the Australian population. That's mind blowing. So we have an excess of empty houses in China and less migration. So the Chinese government were wary of this, right? And they did try to control the amount of debt that the property developers could assume, because why build apartments when clearly there wasn't, quote unquote, real demand for it? And one way they did try to restrict the amount of debt was to restrict, onshore debt, which basically means they limited how much Chinese investors in China could invest into Evergrande. And other property developers. So what that meant was that Evergrande and other property developers had to go outside of China to get their investments. So what what they saw was, through the global bond market, people were just basically giving them money because global investors basically had a very bullish or positive view of the Chinese real estate market. It just kept going up in the view of many. And what the Chinese government saw was, well, then clearly the just restricting debt to restricting onshore debt wasn't enough. It prompted the Chinese government to introduce what we call the three lines policy. So it basically, there's three criterias that a property developer had to meet in order to gain access to credit or to get loans. So these three criteria were, the first one was your liability to asset must be less than 70%. So what you owe, your liability, can't be more than 70% of what you own, your assets. Now, Evergrande had 300 billion US dollars worth of liabilities, which is 2% of GDP. But it only had 240 billion worth of assets. So clearly they've already failed that criteria. The next criteria is that the net gearing ratio must be less than 100%. Now, in layman's terms, you can think of that as a company's debt to equity ratio, which is basically how much of your company is funded by debt versus how much is funded by equity. So it can't be, the debt that you have can't be more than 100% of the equity that you have. So clearly, Evergrande didn't meet that criteria as well. The third red line was that the amount of cash that you hold can't be more, or can't be less, I should say, than the short-term debt that you hold. Now, technically, it's what we call the cash to short-term debt must be more than one. So it means that the short-term debt is those debt falling due within the next 12 months. So those three are the three red lines. The liability to asset ratio can't be more than 70%. The net gearing ratio, or the debt to equity ratio, must be less than 100%. And then the amount of cash has to be more than your short-term debt. Funny enough, when that policy was implemented, about half, more than half of China's top 30 developers couldn't meet these red lines, which basically means that they couldn't access credit anymore. In layman's terms, they couldn't borrow. So at the same time, the government advised the banks to reduce or limit the amount of mortgage loans that they issue to the end consumer. And basically, the effect that had was that without those mortgages, people can't buy those apartments. So you have a double whammy here. You have these property developers failing the three red line policy, which therefore can't access money from their banks, and then the end consumer can't get mortgages to buy the apartments. So the confluence of these events led to Evergrande defaulting in September 2021. So it's the first time that the Chinese developer of that size collapsed, right? So it brought nervousness to the entire bond market in the Chinese property market. So that basically brings us to the headline which I started off with, which is that the Hong Kong court has ordered the liquidation of Evergrande, because after I think 18 months of backwards and forwards, the Judge Linda Chan basically got fed up with Evergrande, because Evergrande was basically delaying their restructure plans, or they're either delaying or they couldn't come up with a restructure plan. Judge Chan basically ran out of patience and said, look, the creditors would be better off if the company is liquidated. So she appointed a restructuring firm, Alvarez and Marshall, as the liquidators. And what they need to do now is calculate all the assets that Evergrande has in both Hong Kong and in mainland China, and then figure out how much they can get and sell to repay their creditors and investors, right? Now, that alone would take years, but it will be complicated by questions about whether creditors will be able to claim Evergrande's assets in mainland China, right? Because remember, this is a Hong Kong court ruling. Now, whether that happens or not would depend on the authorities and the courts in mainland China. So this court ruling has raised more questions than answers. So the other complication is that there's no real precedence about how to go about this. There are some. I think there's back in 2021 there was an arrangement between Hong Kong and mainland China, under which insolvency orders in each of these jurisdictions would be mutually recognized. But nothing. There's been no cases of this size and of this significance that has been really put to the test. So we'll see what will happen. So it leads us to my last big question. What are the implications, and why should we care about all this? I guess this question always depends on who you are. Which stakeholder are you? Are you connected to Evergrande or the Chinese property market? But I argue, even if you're not connected to either one of them, there are still implications to you, me and you, because of how huge this company is. And because of this size, it does have ramifications for the global economy. Now, let's start talking about the small picture first, and then we'll move up to the big picture stuff. Now, first start off with auditors. Now, there will be, I imagine, implications for the auditors of Evergrande, which I believe was PwC at the time. So, Evergrande had a Big Four audit firm auditing them for all these years, and then suddenly in the middle of 2021, Evergrande turns around and said, "Well, it may not be able to repay its debts," and that sort of took everyone by surprise. And one of the questions were asked, well, where were the auditors? How come the auditors didn't pick this up? So there are reports that the authorities are looking into this, and I expect some ramifications for the auditors of Evergrande. Now let's talk about what if you were one of the investors or creditors of Evergrande. Now, even if mainland China agrees with Hong Kong court's ruling to liquidate the company, and even if liquidators were able to calculate all the assets that Evergrande has, over Hong Kong assets and as well as mainland China assets, um, Deloitte's, the consulting company, reckons that the creditors might only get around about 3.5% as the recovery rate. Now, in simple terms, that means that for every dollar that the creditors and investors are owed, they'll only get around about 3.5 cents. And that's sort of the topish end. There are other estimates that it will get lower because of some mismanagement and alleged crimes by Evergrande executives. But the 3.5% is not a figure that any creditor or investor will get too excited about. Now, not last, but we can't forget that there are real people impacted by this. People have put in real money, real human beings putting real money, expecting real apartments to move in at the end of the day. And now they're probably not going to get to see the life savings or their apartments. So there's a real human impact for those investors of those apartments. Now, in terms of trying to fix the problem that was left by Evergrande and other failed property developers, Nomura, the investment bank, estimated last year that there were around about 20 million unfinished homes across China. And the funding gap, the amount of money that's needed to finish those houses or apartments, guess how much it was? 446 billion US dollars. Now that's a chunk of money, no matter who you are, right? So in all likelihood, not all of these apartments will be able to be completed. Now, in terms of bigger picture stuff, in terms of the wider economy, even if you're not in mainland China, the question is, will the collapse of Evergrande will be contagious, right? That is, to what extent will affect the financial industry and the real economy domestically and around the world. Now, as I mentioned before, the property market in mainland China accounts for 25-30% of its economy. So it's one of the major engines of China's economy. So you can imagine the collapse of one of the engines will have a ripple effect, not only domestically, through the supply chains, construction workers. We also mentioned, people who bought apartments, etc. But it will ripple throughout the global economy. Now, as the saying goes, when China sneezes, everyone catches a cold, right? So that's the unfortunate fact. And on that rosy note, if you like this sort of explainer video, let me know about it by liking this video, commenting, subscribing, or hitting the bell icon so you can get notified for when our next video is out. For the time being, take care. Goodbye.